नमस्कार, मैं सीए मनमोहन जिंदल, IBBI registered valuer in security and financial assets from Mumbai. So today we shall discuss the functions of a treasury department. We all know that treasury is very important in every bank, big institutions, even companies, where they have to manage the liquidity of a business and proper cash management. The general mission of the treasury department is to manage the liquidity of it. This means that all current and projected cash flows and outflows must be monitored to ensure that there is sufficient cash to fund company operations as well as to ensure that excess cash is properly invested. We all know that in banks, number of cash is outflowed in terms of withdrawals and loans, and number of deposits have been received by the bank on a day-to-day basis. And to manage the things, is the asset management liability is very important, so that at every point of time the bank or financial institution remains solvent. To accomplishing the mission, the treasurer must engage in considerable prudence to ensure that existing assets are safeguarded through the use of safe forms of investment and hedging. So उसको बहुत प्रूडेंट रहना है, सजग रहना है कि हमें किस में इन्वेस्टमेंट करनी है, कहाँ से ज्यादा पैसा आ जाएगा, क्योंकि उस पैसे को वापस भी करना है और क्या क्या हैजिंग हो सकती है। कई बार ऐसी स्थितियाँ होती हैं कि फॉरेन फंडिंग देते हैं और फॉरेन फंडिंग के क्योंकि रेट बहुत ज़्यादा फ्लक्चुएट होते रहते हैं, इंटरनेशनल करेंसीज फ्लक्चुएट होती रहती हैं, तो कई बार बिजनेस लो इंटरेस्ट के बावजूद लॉस में चले जाते हैं, ज़्यादा पैसा देना पड़ जाता है। सो द फंक्शंस आर कैश forecasting, compile information from around the company to create ongoing cash flow. कितना पैसा हमें शाम तक देना है, कितना पैसा हमारे पास आएगा, वेदर वी आर इन ए मैनेज टू complete the obligations or whether we are in a position to invest the surplus money which we have received in the operation of the company. This information may come from the accounting records, the budget, capital budget, board minutes for dividend payments, and even the CEO for expenditure related to acquisition. So there are number of source treasury department have to link themselves to the various departments of the company or financial institution or banks, that what immediate outflow is coming or what unexpected inflow is coming to the institution. Working capital monitoring. Review the corporate policies related to working capital and model their impact on cash flows. For example, loose credit results in a larger investment in account receivable which consumes cash. Cash concentration. Create a system of funneling cash into the centralized investment account from which cash can be most effectively invested. This may involve the use of notional pooling or cash. So इन्वेस्टमेंट्स का भी बहुत बड़ा काम रहता है ट्रेजरीज के पास. Use the corporate investment policy of allocating excess cash to various types of investment depending on their rates of return and how quickly they can be converted into cash. So GSEC, etc., and treasury bills and cash management bills, they are easily converted into cash. So investment should be like that. They should give the higher rate of interest, higher dividend, and simultaneously available to be converted into the cash. Grant credit. Issue credit to customers which involves management of the policy under which credit terms are granted. So how much money are going in outflow in terms of credit, or how many going outflow in terms of investment, and how much is expected inflow, so that should be properly invested or properly taken care of. Fundraising. Determine when additional cash is needed and raise funds through the acquisition of debt, sale of stock, or changes in company policies that impact the amount of working capital required to run the business. You see that nowadays banks and financial institutions are uh, literally cash short, and they have raised the interest rates to get the additional funding into their institution. So different ways of fundraising from the public or other means are there. That is a separate video or separate discussion we shall take into at another level. Risk management. Use various hedging and netting strategies to reduce risk related to changes in asset values, interest rates, and foreign currency holdings. Credit rating agency relations. Keep any credit rating agency informed of the company's financial results and condition if these agencies are providing rating on company's marketable debt issuance. Bank relations. Keep the company bankers apprised of the company's financial condition and projections, as well as any forthcoming changes in its need for borrowed funds. The discussion may extend to various services provided by the bank to the company, such as logboxes, wire transfers, and so forth. Or on the other hand, we should, if we take the example of the banks, so banks should also be in the bank relations of the other institutions via regulatory bodies. IT system. The department maintains treasury workstations that provide it with information about cash holdings, projections, market conditions, and other. So IT systems should be robust and real time, so that you know minute to minute information of cash holdings, projections, market conditions. Reporting. The treasurer provides the senior management team with reports concerning market conditions, funding issues, returns on investment, cash related risk, and similar topics. So, reported as per the Central Bank of India, as per the Reserve Bank of India, it very, very important. And at what level you have to report, it is as per the bank's policy. Merger and acquisition. The department may advise on the company's acquisition activities and may be called upon to integrate the treasury functions of entity being merged. So, in the nutshell, we can say that treasury functions revolve around the monitoring of cash, the use of cash, and the ability to raise more cash. All other tasks of department support these functions. So treasury means cash, cash, and cash, which can be have as a name of funding. Thank you.